The day you become afraid of losing money is the exact day you stop thinking like a professional trader and start operating like a desperate gambler. Most people enter the market believing that trading is a game of finding the perfect strategy, the ultimate indicator, or an undeniable pattern that guarantees success. I learned the flaw in this logic through intense, painful experience. I have seen millions made and millions lost in the blink of an eye. I have watched traders rise to absolute dominance only to see their fortunes completely vanish because they lacked the psychological foundation required to sustain wealth. Through these cycles of victory and disaster, one profound truth becomes clear. Successful traders do not fear losing money. They respect the market, they manage risk meticulously, and they despise reckless mistakes. But fear never dictates their execution. The moment fear enters your mental operating system, your mind transforms into your own worst enemy. You begin to hesitate at perfect entries. You actively move your stop-loss order out of fear of being proven wrong. You lock in microscopic profits too early, and you hold on to toxic, losing positions far too long, hoping the market will reverse to save your ego. Eventually, the market punishes this emotional friction with absolute certainty. To conquer the markets, you must first conquer the inherent fear of loss, shifting your entire perspective from a state of prediction to a state of total acceptance. Beginners fail to realize that a single loss is never a tragedy. It is simply the fundamental cost of doing business. If you open a premium retail store, you do not expect every single person walking through the door to buy your product. You accept inventory costs and overhead as natural variables of the business model. Yet, when an amateur steps into the trading arena, they expect 100% of their trades to yield a profit. An unrealistic expectation that destroys accounts far faster than bad technical analysis ever could. Defining risk and the nature of the market environment. This toxic expectation of constant profitability stems from a deep misunderstanding of the market environment. The market owes you absolutely nothing. It does not know your name. It does not care about your financial struggles. It has no interest in your opinions, and it remains completely blind to your exact entry price. The market is an unstructured, continuous flow of energy that moves purely based on the collective beliefs and actions of thousands of participants worldwide. Your job is not to predict what this massive force will do next with absolute certainty. Your job is to define your edge, manage your risk, mathematically, participate calmly in whatever opportunities present themselves. Professional traders execute their plans flawlessly because they understand a concept that beginners struggle to grasp. Any single trade is completely inconsequential. One trade means absolutely nothing in the grand scheme of a statistical sample size. Your career as a speculator is never defined by the outcome of a single execution. It is defined by thousands of systematic decisions made consistently over months and years. Professional thinks exclusively in probabilities. They recognize that even the most pristine chart setup, the cleanest breakout, or the most perfect fundamental alignment can fail spectacularly. They have witnessed flawless technical patterns collapse into immediate reversals, and messy, uncertain setups transform into massive, explosive trends. Nothing in the market environment is certain. The only absolute certainty is complete uncertainty. And when you truly accept this reality at a cellular level, your underlying fear begins to evaporate because you no longer possess a psychological need to be right every single time. 5 fundamental truths of trading psychology. When you release the need to be right, you align yourself with the true nature of the market, which operates on a distinct set of psychological laws. To master this environment, you must hardwire 5 fundamental truths into your consciousness. First, anything can happen at any given moment because it only takes one single trader somewhere in the world to negate the outcome of your perfect setup. Second, you do not need to know what is going to happen next in order to make money. An edge is simply an indication of a higher probability of one thing happening over another. Third, there is a completely random distribution between wins and losses for any given set of variables that define an edge. This means if your strategy has a 60% win rate, you could easily face 10 consecutive losses in a row without the validity of your edge being broken. Fourth, an edge is nothing more than an indication of a higher probability of one outcome over another, requiring a large enough sample size to manifest its statistical advantage. Fifth, every moment in the market is completely unique, meaning no past pattern can perfectly predict the exact behavior of the current market structure. When you truly integrate these 5 truths into your trading personality, you stop viewing a losing trade as a personal insult or a failure of your intelligence. Amateurs fight the market, argue with price action, average down into losing positions, and scrutinious love refuse to accept their stop losses because their self-worth is tied to the outcome of the trade. The market will humiliate an arrogant mind repeatedly until it either adapts or runs out of capital entirely. Thinking in probabilities versus expecting outcomes. The moment you transition from expecting specific outcomes to thinking strictly in probabilities, your entire psychological relationship with trading shifts forever. You stop defending your open positions like a fanatic defending a belief system. You stop marrying your trades. Losses stop feeling like painful setbacks and instead transform into pure, objective information. Every single loss is simply immediate feedback from the market environment, acting as the necessary tuition required to run a professional operation. Elite traders do not ask themselves how they can completely avoid losses, because they know avoiding losses in a probabilistic environment is a mathematical impossibility. Instead, they focus entirely on how to keep their losses small and contained. There is a massive, life-changing difference between trying to avoid a loss and actively controlling its size. Think deeply about a professional poker player competing at the highest level. They can execute the mathematically flawless decision based on the cards dealt and still lose a hand due to the random turn of the deck. They do not experience an emotional breakdown or panic when this occurs, because they think in the terms of a large sample size of hands. Trading requires the exact same psychological stance. You can have a perfect structural entry, immaculate risk management, and still lose capital on that specific execution. That does not make you a bad trader. It simply means that the random distribution of probability did not favor your position this time. The amateur loses money and cries out that their strategy is broken, while the professional shrugs, accepts the predefined risk, and moves calmly to the next trade. A hidden mechanism of fear and market analysis. This profound difference in execution is what separates struggling retail participants from market legends. Destructive fear of losing money typically originates from one highly dangerous habit: trading with capital that you cannot afford to lose emotionally or financially. When your rent money, your grocery budget, or your family's core financial security is tied to the movement of a single pip or tick on a chart, every single candlestick movement becomes a terrifying threat to your survival. You lose all ability to think objectively. Your analytical skills degrade, and you succumb to intense emotional volatility. You find yourself forcing low-quality trades out of desperation, revenge trading to claw back recent losses, and over-leveraging your account until a single, adverse move forces a catastrophic margin call. Professional traders bypass this psychological trap entirely by operating strictly with over-risk capital. Before they ever click the order button, they know exactly how many dollars are at risk, and they mentally write off that money as gone the moment the order enters the market. Capital is treated as an operational expense, completely disconnected from their personal security. This mental pre-acceptance of risk is what allows them to remain completely calm, stable, and clear-headed, while the market fluctuates wildly around them, because the inherent uncertainty of the market no longer poses an existential threat to their peace of mind. Why your mind believes the market is an enemy. The human brain is naturally wired to avoid pain, seek certainty, and protect the ego from being proven wrong, which makes it fundamentally ill-equipped for the raw reality of trading. Your mind interprets a market move against your position as a direct threat, triggering a fight-or-flight response that completely shuts down your rational thinking capacity. The market rewards absolute emotional stability, not high intelligence, complex predictions, or heavily marketed technical indicators. It values a mind that can remain perfectly neutral under intense pressure. A calm trader can observe price action objectively, spot real opportunities, and execute their rules without friction, whereas a fearful trader is completely blinded by their internal anxiety. Fear narrows your vision, forces you to focus only on avoiding pain, destroys your hard-earned discipline, and causes you to completely abandon your proven execution system. Fear is the ultimate catalyst that transforms a knowledgeable professional into a reckless gambler who who leaves their financial survival up to blind luck. This is precisely why elite market operators dedicate significantly more time to mastering their internal mental state than they do to overanalyzing historical price charts. They understand deeply that the true battle is never fought against the market structure itself. The real battle is fought against the deeply ingrained emotional flaws within their own minds. The cost of needing to be right. Human nature has remained entirely unchanged for centuries, which is why market dynamics repeat themselves across generations. Whether it was 100 years ago or 100 years into the future, the masses will always enter the market driven by intense greed and driven out by debilitating fear. The winners in this arena will always remain the select few who can step outside of this emotional cycle, accept underlying uncertainty, and enforce strict risk parameters on every single position. The market acts as a giant mechanism designed to transfer wealth from the emotional, undisciplined masses to the highly focused, structured, and disciplined individuals. Consider a clear example of two traders, each managing an identical $10,000 account. The first trader operates out of a deep-seated need to make money fast, risking 50% of his entire account balance on a single trade because he feels incredibly certain about the setup. The second trader views the exact same market through a lens of probability, risking a disciplined 1% of his capital on the position. When the market makes an unexpected, volatile move against both positions, the first trader loses $5,000 instantly, causing an immediate emotional collapse. Fear takes complete control of his nervous system. His sleep is disrupted. He enters a state of panic, leading to reckless revenge trading that wipes out his remaining capital within days. The second trader loses a minor $100, experiences absolutely no emotional disruption, calmly reviews the data, and waits patiently for the next high-probability setup to appear. Cultivating the state of mind, emotional neutrality. The second trader possesses a massive, long-term advantage because fear was never allowed to hijack his psychological execution. He is not fearless because he possesses unnatural bravery. He is fearless because his risk management parameters are so intelligent that no single loss can ever damage his emotional equilibrium. Strict risk management builds genuine confidence, and true confidence completely eliminates execution fear. Your ultimate goal as a speculator is never to avoid individual losses. Your goal is to survive long enough to catch the massive, asymmetric market trends that generate real wealth. The largest fortunes are built from a handful of massive, highly profitable moves, not from hundreds of chaotic, over-leveraged micro-trades. A disciplined professional can easily take several consecutive small losses, protect their core capital, and then catch one major trending move that completely transforms their financial year. This highly profitable outcome can only manifest if you possess the discipline to survive quiet, choppy periods. Small, controlled losses are the insurance premiums you pay for your long-term survival. Survival creates continuous market opportunity, and opportunity, when executed with absolute consistency, builds generational wealth. When you take a loss, you must train your mind to stop asking why this happened to you, or feeling like a victim of the market makers. Instead, look at your plan and ask a single objective question. Did I follow my rules? If the answer is yes, you should feel a deep sense of accomplishment because you executed like a true professional. Capital protection as a function of self-discipline. A trader who fears losing money cannot think with clarity, while a trader who completely accepts the reality of loss acts with total freedom. Confidence, unwavering discipline, and intense patience are the exact psychological pillars that build immense wealth over time. You can lose capital and earn it back relatively quickly if your psychological capital remains fully intact, but once your internal discipline is shattered, the market will systematically strip away every single dollar you possess. You must trade with deep patience, risk small percentages, think exclusively in probabilities, fiercely protect your financial capital, and let the statistical edge play out over a large sample size. Most traders falsely believe that money is their primary issue in the market. Their true problem is their flawed, scarcity-minded relationship with money itself. The market acts as a giant psychological mirror, completely exposing exactly who you are the moment you put real money on the line. If you are naturally impatient, the market will rapidly expose your impatience through forced entries. If you harbor deep greed, the market will expose it by causing you to over-leverage. If you are ruled by fear, the market will expose it by making you freeze at critical moments. Speculation is one of the very few professions where your hidden psychological flaws directly affect your bottom line, which is why two people can trade the exact same strategy yet experience completely opposite financial outcomes. The ultimate evolution of your trading identity. One trader masters his mind, applies consistency, and becomes highly profitable, while the other succumbs to emotional pressure and completely obliterates his account using the exact same entry signals. The market does not compensate you for being the smartest person in the room. It pays you exclusively for being emotionally consistent. If you want to join the top elite who extract consistent wealth from the markets year after year, you must stop looking for external secrets and start mastering your internal execution. If you found immense value in this deep dive into the core mechanics of trading psychology, make sure to hit that subscribe button right now, turn on all notifications, and smash the like button to support the channel. We are completely dedicated to bringing you the highest quality, most actionable mindset training available, so you can eliminate fear, master discipline, and completely evolve your trading identity. Drop a comment below, sharing the biggest psychological hurdle you are currently facing in your SERB, and let's build a bulletproof mindset together. Thank you for watching. Protect your capital with absolute discipline. Stay completely calm. We will see you in the very next video.